Hello, guys, and welcome back to the Profit Manage channel. Welcome, happy Monday, and welcome back to another weekly update. So, yesterday I made for the premium and for you guys on the YouTube channel a pre-weekly breakdown, which you can still go and watch. And right after that, right after we got this weekly candle closures, we actually saw something shift. So I'm actually going to be covering that today based on what I currently see, because there are some important things that we must mention as of right now. So let's start with the USD dominance chart, because here we can actually see something that personally yesterday, at the moment where when I was started to when I was recording this video right here, which I also mentioned, I mentioned in this previous video that things could change, because of course there was still around 9 hours before we had that weekly candle closure, and indeed things did change, because you can go on the weekly time frame and all of a sudden, right, we are above, we close the weekly candle above the bullish trendline channel. On the daily, look at that, we actually had a significant retrace yesterday right before we closed the daily candle, and all of a sudden now we are actually holding support above 7.78%, which was that level that I gave you guys yesterday to monitor, because we wanted to see a price actually close below 7.78% if we were to go and expect to see some bullishness right away. So because this has shifted, what this is already telling us is that this week we could actually expect to see, at least at the beginning, some sort of a pullback in the market, which is actually already starting. If you were to deploy a Fibonacci on the USD dominance chart, we can see that we have the bearish golden pocket right here. We got the equilibrium point right at 8.32%. So this is going to be your very first key level this week that you gotta monitor, just in case we end up moving up in this region. So this is where you could actually start to play potentially, again, potentially keyword, a counter trend bounce, where you could potentially see the USD dominance chart retracing a little bit, if we are not going to go any higher. So, what does that mean? Well, that actually means that you gotta be careful, because the market may actually retrace, or potentially go in and put in a new low. We end up putting a new low is if we end up going up to 9.70%. So you gotta monitor this. You gotta watch out for the what happens, the reaction, as we step into this bearish golden pocket for the USD dominance chart, from the swing guy right here at 903, all the way down to 7.61%. This is your Fibonacci that you gotta watch out for right now. If you end up finding resistance at any of these levels, then you can actually expect to potentially see overall a simple retrace, some sort of a formation. In the case of the SD dominance chart, that will basically imply that we end up seeing something like a M formation. I apologize for how thick this is currently looking. If you guys want to see my portfolio, my coins, how much I've invested in each coin, my entry prices, and you want to get all of my trades and exit signals, then check out the link down below. You can subscribe to our premium group. This is going to be the best deal that you can get right now. The prices will go up very soon. We want to lock in as many people as possible before the old season starts, because once the old season starts, guys, it will be too late, and it will be time to sell, not to buy. So make sure to join Profit Manage as soon as possible. Get in, secure your spot, and make this your life changing cycle. So we may see potentially something like this playing out if we end up finding resistance here. This is the key thing, okay? Because if we don't, okay, and if we actually end up pushing higher, we do have some potential indications for that, and we will have to use this trend line. We may actually see, guys, a further continuation to the downside. So be careful. be careful because this could still potentially happen. And the alignments with this, as of today, will basically be up to 9.95%. So we're not necessarily looking at 9.71 only, but probably to around 9.95% on the USD dominant share. So that would be a pretty decent correction. That would be probably Bitcoin, just to put into perspective, going and taking out the slow and starting to trade inside of the 50K area, somewhere around, below 60 and above 50. Probably that would be my best guess. Do we have any points of interest right there? I mean, there isn't a low right here, but this is a 50. Your very first important levels would be a 59 and potentially a 52.5. I could actually go and give you guys a more specific level with one of the strategies that I do teach, which is the equilibrium zone strategy. And yeah, it will definitely still be between 64 and 61, where you kind of want to focus on right now. First and foremost, okay. So these levels right here, guys, if they do not hold, expect some more downside. But because this is your first and important level of support on Bitcoin, you still gotta watch out for potentially secondary top to form within this region between 8.32% to 8.73%. So this will definitely be your first level of potential resistance on the USD dominant share. So this may potentially imply, okay, that we not necessarily see a new low right now, but instead just a pullback to actually give something like Bitcoin a better formation preparations for some more upside. That will be perhaps something looking like this, where you got your first leg to the downside, and then the secondary leg that stops somewhere around this region, okay, before moving to the upside. So essentially a double bottom, a W formation, however you guys want to call it. We may potentially be looking for something like this, but then again, I cannot stress this enough. You gotta look at the USD dominance chart. Okay, this will give you guys all the information that you need at this moment in time. Let's also look at our secondary version of the USD dominance chart, because here, guys, and this is even more threatening, in my personal opinion, we are actually holding above my equilibrium zone. And I said that there are times where if they don't create a reaction, they do go higher, but then eventually you want to see them rolling over when it's of course something that should be creating a reaction back to the downside. But if we if you see something like this as it's currently doing right now, unless it changes, right, it is actually indicating that we may see, guys, another push to the upside on the SC dominance chart and potentially even a new low in the market. So again, be careful. If you don't want to trade this, you may want to sit back and wait what actually unfolds before pressing that button. It's completely up to you. But yeah, just be mindful of the risks that are still present in the market. Okay, be careful because if we do manage to actually start to move to the upside, in my opinion, guys, there's a good chance that we end up moving to around 9.80% minimum. So again, here we got alignments with 9.95 from tomorrow. That's going to be you know 10.24%. That's a new is that a new all-time high on the USD dominance chart? Let me double check. Yes, that is a new all-time high on the USD dominance chart. So that's quite important. You're basically taking out the high that basically got Bitcoin to bottom in 2022. So it's a quite important level, if it does end up happening. So just be mindful, because this week, like I said yesterday in the video, it's a very important week. Okay, where we'll definitely get some action. The thing is to which side. But yeah, things are looking suspicious at this moment, and let's get ready for it. Of course, if you are in spot, guys, it will still be an opportunity to buy. I cannot stress this enough. I said it in the previous videos, and if you haven't already, please go and watch, especially this video right here, where I said that this is where you can expect all season to start. You can also go and watch yesterday's video or the video where I speak about if the bottom is in or not, and where I clearly state that I don't think that that the bottom is necessarily in. But what I was expecting to see, and what I still think it's a possibility for this week, is a move to the upside before that. Okay, but we could also get a situation where we flush that low that we just created, and then we move to the upside, and then I will still get the upside that I want to see. It's just that we perhaps had to go a little bit lower first. Okay, so just be mindful about it. Total 3 minus Solana and BNB. Technically speaking, this is still low. This is still looking very good in my opinion. So it's not looking that bad. It's just something that, especially with Bitcoin, guys, I think that what may suffer the most as we are currently seeing already is probably going to be Bitcoin. It's not going to be, well, of course, altcoins are likely to go down as well, but they're not going to be going down as much compared to Bitcoin. So it's just a matter of perspective, in my opinion. So yesterday, I actually gave you guys this red trend lines right here to pay attention to. Okay, these are trend lines that are still requiring the red ones. They're still requiring a retest to the downside for them to be, for them to get the third touch that they need. So there is that chance, right, where we do go and push a little bit lower. Let me actually remove the seller right here and actually push this down a little bit lower. And let me actually rename it. No, actually, this is fine. Okay, so this will be your next checkpoint for this week at $525 billion if we were to see that. But so far on the 223 minus Solana and BNB, guys, we are still holding above this runner right here, and you're still holding above. Let me get the right level to you guys. $559.7 billion. Okay, if you start to see candle closures below it, guys, there's a good chance that we will roll over and take out the slow that we have just created. But so far, we are in a situation where, with this particular chart, there's still a lot of support right here. All these trends right here that you guys are seeing are missing the third touch, and that third touch is what ends up creating a reversal to the other direction, which in this case is going to be to the upside. You also have a bullish Fibonacci right here. Okay, you are in between, right, the 61.8% and the 70.5 percent. Okay, so you do have quite a bit of support right here, where even in the case where you do see that low tapped, I don't think that you should really be scared, because it's likely that we end up seeing another push to the upside. So well, a continuation to the upside in this situation. Moving on to the total 2 chart, again, here, so you can see the weekly time frame did close above my trend line, but now we're trading below. So this could be something temporary. At the end of the day, this is the weekly time frame, so there are still 6 days and 10 hours left before we see whether it's likely that we're going to get another continuation to the downside or not. So for this particular chart, I actually want to go on the daily. And on the daily, look, we actually did close, even though not in the best manner. I would still say that this has closed within the trend line. Okay, so what this may represent, guys, is that early in the week we may get a subtle push to the downside, not too crazy. Perhaps the total two actually ends up holding this low, and then we see the move to the upside. We may see that sort of a correction, even with a Fibonacci perspective. I think that it will make sense. Yeah, you got the equilibrium level right here, the 6.8% right here. There's a good chance, considering the entire region which we're in and all the support that we have in this area, that the total two may actually end up holding this low for now at least. But even if it doesn't, guys, if it doesn't, I'll give you guys a level for it, and that will be from tomorrow, $800 billion. But it's very good, because this trend right here, guys, is the trend from COVID, which is the trend that has created every single major bull swing since it was created. You can see that this is the trend that created this entire move to the upside up to 2021. This is the trend line, right, where we found that push to the upside from 2023 to pretty much 2025. So if we were to revisit it, guys, it's not bad. Okay, it's just a temporary pit stop before we actually see a major move to the to the upside. Sorry. And if we were to get there sooner rather than later, in my opinion, it will start to diverge what I think will happen next, where we will see a major move to the upside back to the highs, then another correction where we are most likely not going to revisit this region if we end up revisiting it now, and then we get a major push to the upside. Again, guys, if you're focused in the old season, any dip right now is an opportunity, in my personal opinion. Okay, not financial advice, but this is great for the holders. Okay, and well, holders that still have cash positions. I need to specify that. Okay, so total three, sorry, total one. This is the contrarian layout. Okay, you're again, you're still within the bullish golden pocket, but you did close below the first trend line of the trend line channel. So this automatically gives you another level to look at as your potential support for this week. And this level will be not this one, but rather 2.15 trillion. But then again, here, if we end up just tapping that level only, you're not going to be making a new low. If anything, you're actually going to give price more structure before moving to the upside. And you can see that it's pretty much the same formation as the previous charts, and therefore you can expect to see, yeah, a bullish golden pocket within this level. So you may see that retrace again, where people then perhaps start to expect this low to be taken out. Perhaps the market doesn't do it, and then it starts to move higher. Okay, so if that were to be the case, your first level to the upside is going to be $2.86 trillion, okay, as your very first level of resistance. It's not 2.68 because that's where your level of support is beginning. This entire area right here can be interpreted as support at this moment because you have a bullish golden pocket right here. So if we lose this now, okay, if we lose it, different story, because, well, you are most likely going to go down to $1.47 trillion dollars, and this is the bear market bottom trend line. Okay, this is the trend line channel that originates from COVID. So, if we were, okay, to go down into this region, yes, it will look scary, but this is an opportunity of a lifetime, because that's where, historically speaking, we can see major uptrends began. Okay, that's where they began since COVID. So that's not something that you want to neglect. You may see another push a little bit lower afterwards. It's likely not going to respect it perfectly because we are missing the third touch. The third touch, guys, of a trend is the most manipulative. Okay, so if you were to see that, expect a little bit of a dip lower, but then a quick recovery back up in preparation of a move to the upside. But this is just in case it happens. Okay, your very first level of support, like I said, is 2.15 trillion dollars. Total two, still below the 200 EMA. We actually had the weekly candle closure below that. So your very first level of support is definitely going to be, no, that. Hold on, let me remove the magnet for a second. It's going to be $869 billion. But like I said, look, if we strike this trend line, the lower one, the better, guys. It's the same trend line on a different chart, okay? And that's at $801 billion. So quite a lot of support on here. Do not be scared. Don't be shaken out, especially if you're an older. If we were to see those prices once again, you are doing all of this, guys, instead of a bullish golden pocket. So how bullish is that? Um, yeah, moving on. Let's go to the total three. Total three, it is above the 200 EMA, so we do have a little bit more of a strong chart right here compared to the total two. In terms of the EMAs, you still did close below the trend right here. Yeah, your first level support is going to be $633 billion. We have not yet tested it, so there's a good chance that it holds. If you lose it, $504.93 billion this week is going to be your level of support. But if this region right here holds, we are going to be seeing a move to the upside to around $858 to $920 billion. So Um, Again, there is a check. So what I'm saying so far in the video, just so everybody gets it, is I'm still looking up. Okay, like I said yesterday in the video, I do have an overall bullish bias for this week, but I understand that there is a short-term correction coming. Okay, that short-term correction is something that I am now able to see after seeing the weekly candle closure, and that's something that yesterday we did not have. Okay, so with that being said, we may see early in the week that extra push to the downside before we see a recovery towards the end of the week and a continuation higher potentially from next week. Okay, so be mindful, okay, because that could be the situation that ends up arising. I'm giving you guys the levels, the orders chart. So here you can see that we are actually still holding above the first trend line of our trend line channel. So this is quite good because it's telling us that the altcoins guys are very resilient at this moment. So again, 168 billion, that's your first level of support. If you lose that, okay, then we are looking at 137 billion dollars, assuming that we end up going down there. And that is the trend again from COVID. Okay, so I feel like this entire area between 168 to 117 billion dollars, guys, is your bottoming area for the orders chart, okay? Or at least that this is my level, okay? It's never meant to be financial advice, but I see a lot of conferences down here that I do not neglect. I see a lot of reasons here to be bullish within this region, and a very good reason, in my personal opinion, to be a buyer rather than a seller. So there is this trend right here that I've just had it. I'm going to be making it bigger so you guys can see it for a second, which is another confluence, right, to justify another push to the downside. And that will take you down to $144 billion. But you're missing the third touch. So, what does that imply? That you're likely going to see an extra push to the downside, which, in my opinion, will hit this trend line from COVID at $137.88 billion. So, there is quite the confluences down here to justify another push to the downside. Plus, if I were to actually update this trend line after getting this wick, which did exactly what I'm telling you guys that this trend lines do, you can see first touch, second touch, the third touch, we had a wick fishing below, bear trap, continuation higher, instant recovery. If you would have scalped that, that would have been easy money. But now this trend line, because we had a new wick, has been updated, okay? And you can see that the trend line right now will point to a correction back down to pretty much the slow as of this week. That's 150 billion. It's a pretty static trend line. It doesn't really move with time. So 150 billion dollars, that's going to be a very important level as well. You know, you have quite the levels in this region, to be honest. So I don't feel like, getting down into this region is that bad. Okay, I think that there will be a lot of headlines for it, but even this one right here, still missing the third touch. Alignment 150 billion. So with all of this stuff that I'm seeing here, I feel like that extra bit of a correction, if it comes, right, is going to be very, very beneficial for us because it's going to tap a lot in one go. And it's happening only in a region which I hate to be repetitive, but it's all happening in a region where you have a lot of support. I cannot stress it enough. So many reasons, in my opinion, here to be bullish. So let me actually remove all of this stuff right here. This I will not, because my projection was that we will go and take out this low, which we have done. Okay, but now we could potentially see that extra push to the upside before we see a significant reversal back up for the altcoin. So if this is not the bottom, what's the difference if we end up bottoming down 7% lower than where we have wicked before, right? Of course, from here that's almost another 20%, but from the last wick is 7%. So I think that the bottom is pretty much almost in. Okay, it's just a matter of getting all of this stuff done and over with. Um, yeah, moving on. So Bitcoin, this is one of my Bitcoin charts, not the only one, but this is currently pointing down to potentially 55K. Okay, so again, if you were to lose, let me bring it up again. If you were to lose 64 and 61, there's a good chance for us to visit 55. Okay, I will actually be adding an alert here for it because that's something that I do want to long if we were to see it. That's also the touch of a trend line. Now, this is a trend line from January of 2023. You know, the COVID trend line, guys, for Bitcoin, okay, will basically take us down as of today to 29.7. I don't think that we will see it just yet. I think that that comes later down the line once we have actually done and retested this run right here. That at this moment actually points up to 106K. So my projection points to, you know, bottom within this region, 55K bottom most likely in this case, push to the upside, 106, and then we start to go and trickle down lower to probably 30K. You know, this doesn't have to be a fast move. This can actually take its sweet time, and by taking its sweet time, this trend right here actually increases in value. Okay, so let's assume that we do this in June. We're no longer speaking about 106, but we're speaking about 120. Okay, so you see where this is going. It depends on when we actually end up hitting it. So I'm giving you guys updated levels based well, day by day pretty much. Okay, so this is Bitcoin. Now for Solana. Okay, for Solana, I gave you guys the bottoming levels, which so far I've held. Yesterday on Involio as well, I actually entered a bunch of longs. The reason why I wanted to do that is because there was a potential, right, for this, and there still is. Okay, don't get it twisted. There's still the possibility, okay, that this is a decent bottom that we can use to long. So I did not go for a specific precise entry level on a few longs that I've taken yesterday. But the point here was that if we were to have seen the move to the upside that I'm calling for this week, okay, I wanted to be a part of it. Okay, so I'm just taking stabs at all these trades, and you know, if they click, cool. If they don't, okay, I will long again. Okay, and I will probably be able to long it with more size and more leverage, allow me to recoup the losses that I'm currently potentially going to be making, and still be in a situation where you know, once it starts to move, I'm in. Okay, that's kind of the point of some of the longs that I've taken yesterday in the last few days. It's not meant to be perfect. The only trade that I kind of try to be precise, and it's not even the most precise that I could have been, is Bitcoin. Okay, because I started with longing between 74 to 73. I don't remember exactly what I've entered, but I've entered in this region. Then that trade failed, and my stop loss was pretty much the entry of this next trade. Okay, so of course, if this trade were to fail, okay, I'll probably be longing once again, but from 55K. Okay, which is aligned with this other chart right here that I showed you guys just a second ago. So in terms of Solana, I am bullish. It's just a matter of seeing whether we have to go down into this region once again. If we were to tag $78, I will probably be stopped out, but that would be another level that I will long again. Okay, and my target is still going to be, regardless of what happens in the short term, $124. Okay, probably if it takes longer, it will probably go down to around 123. It's just a matter of seeing how long it takes for us to get there. Okay, so this will be the levels right now for Solana. Moving on. So with Bitcoin, I kind of already mentioned the levels. So downside risk is 57K. Your first level of support is 64.2 to 61.6. To the upside, your first level of resistance is going to be at 74.3 to. Oh, did I get the right level? Okay, sorry. 73.7 to 74.4. That would be your very first level of resistance. The next one is going to be 80K.5. And once you move through that, if you're able to, then we can speak about 85K. Okay, this would be the levels at this moment in time. Moving on to the Bitcoin dominance. Again, you guys can see that the Bitcoin dominance at this moment in time is still stalling, but I'm still looking for potentially 60.40. It's not that big of a deal. It's just moving back up into this region. It's not that much that I'm calling for, realistically speaking. Ethereum still in a long year, pretty much sitting a break even at this moment, still holding that breaker. There is that potential, okay, for us to push a little bit lower down to 1600, and that's still a level that I want to long. Okay, it's just a matter of trying here, because I think that once we step into 16 to 15, we have quite the levels down here. Okay, and technically speaking, my stop loss does account for all of this. Okay, so technically I may not necessarily get stopped out, but because all these runs right here are missing the third touch, there is a chance of getting that extra wick fishing, which if it does end up happening, I will have to long again. But then I will have a swing setup, which, if everything goes accordingly, I will be able to hold into a new all-time high. So this is stuff that I want to build now for longer. Okay, so I'm particularly bullish on the market, guys. It's just a matter of seeing whether we can get an extra bit to the downside, which, again, let me say this once again, it's beneficial for us. Okay, it is beneficial. The market is recovering a lot of liquidity to the downside, while also creating a lot of liquidity to the upside, and that's kind of what you want to see in preparation for a move to the upside. I mean, look at this. Okay, you can see that, and let me actually remove the drawings if I can for a second. Remove the drawings, and here you can see that all these liquidity levels right here have been created with this move to the downside. You have a liquidity level that goes all the way up to $4,000 to 700. That's all stuff that is going to be recovered. Of course, yes, you do have a lot of liquidity down here. Yes, okay, but this is stuff that you kind of want to think about in a true bear market. I don't think that we are in one. I think that the USD dominance chart, okay, with the fact that it's potentially now aiming towards a new all-time high, and again, these are levels that pretty much mark the bottom for Bitcoin in 2022. I don't think that this is ready to go significantly higher right now. I don't think that we will see 18% right now. If I'm wrong, I'm wrong, but I don't think that this is going to be the case just yet. And therefore, I think that we don't have to worry for stuff like this down here. Could we go down and tap 1757? Sure, okay. But you can see that at least on the weekly time frame, this is all that we got to the downside now. So from there onwards, we gotta figure out, right, when will the trend change and start to attack this liquidity levels up here. That's kind of where your focus should be at this moment in time. Now, of course, I'm not going to go on the daily time frame because this gets a lot, very confusing. On the higher time frames, you can actually map out a little bit better where your focus should be at this moment in time. In my opinion, it is to look at the upside. Okay, moving on, we got the total 3 minus Solana, BNB, XRP, USDT, and USDC. So, okay, we closed below this trend line right here. But like I said in previous videos, I did want to see this push down a little bit lower. So, at this moment in time, I'm looking between 197 to 191. 191, guys, is the best. It's that trend line from COVID once again. Okay, so pushing down across all these different charts into that particular trend line, in my opinion, guys, would be so beneficial. It's not even fun. It's just a matter of doing that because that creates a lot of liquidity in preparation for the move to the upside. So let me know what you guys are thinking. Let me know your thoughts. Are you guys bullish or bearish? Are you guys selling? Are you guys buying? Let me know your thoughts.